In the energy quadrant, we have a small reversal today in the March crude oil futures. Crude oil hit its highest level since January 12th. And incidentally, it's the second highest level in the last 16 sessions. But it turns around to complete its first down session in the last three, but third in the last five. So still the trend is kind of mixed. On the low today, 72.99 was down 1.3%. But prior to that, we had a high of 74.63. That was up a little bit more than 0.9%. We obviously finished down closer to the low than the high, down a little bit less than 0.75%. Now, other than the breakout between September 1st and October 27th, crude oil still remains in that same $17 or 25%, whichever way you want to look at it, range that it has been in since about November 17th of 2022. Just not much going on, and this is a characteristic of crude oil. Now, geopolitical risks are being blamed for the last 4 days of lowered WTI volumes. Now, today we have preliminary volume, but it's lower again. And this is just not about the Red Sea anymore, but it's about the back and forth strikes between Iran and Pakistan that has happened this past week. And that kind of geopolitical tension will keep many shorter term traders out of markets, especially on a Friday, especially when it involves a large oil producing nation like Iran. So you keep that in the mix and you'll start to see lowered volumes going forward on Fridays especially. Also, Friday we get rig counts, U.S. rig counts, while U.S. production still continues to excel. We're looking at a rig count trend that might be a little bit lower. After briefly moving back above 500 rigs on January 5th, rig counts have now fallen for 2 consecutive weeks. This is the Baker Hughes rig counts number, and it matters for future production, not necessarily for price action today, but it's something to keep an eye on in the crude oil markets.